What is happening to the stock market? It is just a slight adjustment, or are we in the beginning of a recession? In this video, I will explain to you what is going on and how you can protect your money. Hi there, welcome to your channel, The Foreigner in America, where I teach locals and foreigners everything related to money and personal finances, including investing in the markets, cryptos, real estate, and businesses. So if you're someone like myself who wants to achieve greater wealth in life, and you don't settle for pennies but for Benjamins, and you love money, please subscribe to this great channel and hit that bell so you don't miss any one of my weekly videos. Also check out my Instagram and TikTok at The Foreigner in America, and my blog under the same name. So without further ado, let's begin. If you're an investor in the market, whether it's only in your 401k or index funds that track a bunch of companies together, or mutual funds which diversify your money into different segments of the market, or individual stocks which are the riskiest, you are interested on what is going on with this market drop. I'm not a financial analyst or have taken the courses, but this is how I understand it, and so should you. The market keeps being low, although losses have been recovering a little bit on Tuesday. The S&P 500 was in a correction mode for the second day straight, and all eyes are on the Federal Reserve because their two-day policy meeting is in place. So during Tuesday afternoon, the Dow Jones was up 32 points, or 0.1%, recovering from the losses one day after the benchmark reversed 1,100 point loss to finish up 99 points. But the S&P 500 dropped 0.6%, while the nasdaq composite dropped 1.3%. So investors are still not confident in the market since it's still in a correction territory below its 200-day moving average. So on Monday, the S&P 500 and nasdaq both were down for more than 3% for the day. And then all three indexes just staged a comeback to end up in the green. They ended up 4.4% over. So this kind of behavior is typical of market drawdowns and volatile periods like the ones we saw on the financial crisis of 2018. The risks of the market are still there, even though we have seen better numbers so far. The real thing here is that will make the markets keep going down or not is the topic of interest rates. The monetary policy decision released Wednesday anticipates several interest rate increases this year. But how many? For how much? That is what investors want to know so they can sell stocks. I don't think anyone will be surprised if Jerome Powell comes out saying that interest rates need to be brought up 4 times this year to control inflation. If this happens, it will stop the growth in the market. If the Fed reduces its balance sheet, the Treasury bonds will suffer, bond prices will go lower, and yields will go up. Higher long-dated bond yields make future profits less valuable, causing stock valuations to decline. Again, no one will be surprised if the Fed raises the rates. It's expected. But the velocity on how they do it will make the markets shake, and there will be a slowdown in the economy. There are earnings reports coming up which should help bring stocks higher, or at least soften the impact. Big companies are coming up with their earning reports like Microsoft, Johnson & Johnson, Verizon, Texas Instruments, General Electric, and Moderna. It is not enough though, as companies have had good earning reports and stocks haven't moved much as of this Monday. They were down 0.3%. London's FTSE 100 went up 1%, and Tokyo's dropped 1.7%. So West Texas Intermediate crude oil futures were up 2.2% to $85 a barrel. And the cryptos are getting better, but still in the low. So Bitcoin, the leading digital asset, was up 8% to above 36,000 before dipping 0.9%. It had traded hands near 33,000 in the depths of Monday's selling, but hovered over 42,000 as recently as the end of the last week. Bitcoin remains well off its record high of $68,990 reached in early November. As of when you watch this video, this is what you must do. Keep your earnings and your stocks and funds in place. Do not panic like 50% of the people who are watching the markets. The Fed is not going to come out and ruin the markets. We're not going to go from a 0% to a 5% overnight. We know more or less how it's going to be. Let me give you my foreigner insight. Stocks that drop are for sale. It's like a Black Friday for the market. The only thing that worries me are baby boomers that want to retire. If your 401k drops 10 or 20%, they might not be able to retire, but that is the wonder of a 401k. That is why I always tell you to invest 20% of your money on different vehicles besides your 401k. Real estate is your best bet. Cryptos, NFTs are also great investments for the future, especially when Bitcoin is under 40,000 a coin like right now. But remember, take control of your life and take control of your money. If you like my video, give me a like and subscribe to this great channel and hit that bell so you miss any one of my videos for more advice on crypto investing, the stock market, real estate, businesses, how to make more money, and topics that you love. So have a great day, and I'll see you next time.